Welcome to today's video technical update presented by FX Times. It is Tuesday, February 9th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. Today I'll follow up on the euro dollar, pound yen, and this dollar Swiss franc pairs. This video is being produced at about 3:10 p.m. Eastern Time near the close of the US session. The price action for the euro dollar today represents or completes a reversal combination here in these three candlesticks. So the question now is whether this will be a retracement or a reversal. So we're gonna stalk this rally to see if it tops off and continues to decline, or whether there will be some renewed bullish momentum coming this week. So now looking at the 4-hour time frame to see more detail of today's price action, we see the market here break out of this triangle upwards, and it's nearing its pattern breakout projection here at 61.8%, which is coincident with this intermediate downsloping trend line. So in the Asian session, if the market here stops here below 1.3850, which is, as you see here, is also a power line, the market may continue to fall. And with a lot of bullish momentum that we see in the daily time frame and the weekly time frame, that is likely to occur. But if the market continues to and breaks this trend line, the next trend line we're going to test is probably around 1.4, this declining trend line here, coincident with this previous power line as well. So right now at 1.3850, if the market holds and declines, it's the bearish outlook. If it breaks it, we're still in retracement mode, and we would want to see a test of this 1.40 area, and if it breaks that, then we're in a reversal. However, at the moment, going with the trend, it's a continuation for the decline. And then looking at the weekly, you see at the moment, using this Fibonacci expansion tool, we have 100% swing projection. If the market continues to decline, we may go to 127, which is 133 area, 133.80 area. And if the market passes that, there's a heavy support, or a very strong support here at coincident of 78.6 and 161.8% expansion. So the 1.3 area is a very important support, and if the market continues to decline, look for bottoming action there, if not the 127% expansion area. Price action for the pound-dollar pair is similar to the euro-dollar pair today. Here we see this possible reversal combination, and again, if there's a reversal, we may see a rally to the 38.2%, which is 1.5880. That's the daily time frame. We see here also the stochastic rolling over and possibly exiting the oversold zone in a couple of days if the market continues to rally. Now looking at the 4-hour time frame, we see that 38.2% in the daily is actually 61.8% here in the 4-hour time frame of this smaller swing. So the market at the moment is testing the smaller swings, 38.2% retracement. The momentum is showing this retracement taking place. So we may have more consolidation, and we'll see in the Asian session if the market continues towards the 1.58 area. Now looking back here, so if the market here gets topping action, you should also observe that in the stochastic, the momentum should not be able to extend past like the 70 level. Then that would be a very strong indication of the market going into bearish mode. Otherwise, we may be continuing in this sideways, slightly downsloping channel. And in the weekly, you see this channel here with the gray lines here. So the market may be stopped here, and it probably would rally. Now looking at a wave count, with the bearish outlook, the market shouldn't come down below 1.0 This right here, it shouldn't come down below 1.5 area, because that would be the end of wave 1, and this could be the wave 4. Now if it does come down below, that means we had completed wave 5 here, and that would have been a truncated wave 5 with the ABC retracement, and then another wave cycle should follow. So we're either at the wave at the ABC correction of a complete Elliott wave, or this is just wave 4 and we may have wave 5 following a bounce from 1.5. The pound yen pair is testing a very important support here at around 140, 139, 140 area. So far it's showing a reversal candlestick price action, and so we'll see. The market has been declining, and this is a very bearish candlestick. Today there was some risk appetite, but it's not strong enough to retrace significantly. So if there is further retracement, the soonest anticipation would be some topping action here around 140, 144, and if the market tops off there and continues to decline, that's a very strong bearish outlook. Otherwise, the market continues and will try to test the 150 area. And you could observe the action in the momentum indicator here, the stochastic. If the market continues and reaches the overbought zone, that shows bearish, bullish takeover, and in this time frame it would be indicative of furthering this ranging action. If the momentum fails and instead rolls over around 70 or 60 area, that indicates a further bearish action. And in the weekly, we see a swing projection would take us to about 130. So those are the two scenarios for the pound yen. Here's the dollar Swiss franc daily time frame. The market is showing some short-term reversal pattern, and this comes after a completion of a Gartley and also a test of 78.6% retracement, and so swing projection completed. So yes, there's some short-term bearish action expected. Now, are we going to continue bearish action after this Gartley, or is this going to be a short-term bearish action that leads to further bullish action, which means that this would be a start of a bullish count? Looking at if the market is supported by this upsloping trend line at 1.04, 1.05, and the momentum can avoid coming down to oversold area, then that's indicative of the bullish takeover. And if that happens, looking at the weekly time frame, here I'm going to zoom in a little bit. Here we have one swing, second swing, we're at the 100%. So another extension of the swing should go up to test this downsloping trend line here at 1.9, and we may be that we may start a bullish count, and this could be wave 3 when this is wave 1, 2, and 3. So wave 3 should be longer than 1, and it could be here at 1.09, 1.1 area, or if it breaks that, the 161.8% is 1.011 or 1.0108 area. And looking at the momentum, by the way, it shows that the market here, is bullish after a long run of bearish momentum. The market finally is becoming bullish. And that wraps it up for today. Visit fxtimes.com for more fundamental and technical updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.